Do you agree with Goldman's assessment that the chance of a recession has lowered? And what's leading you to believe what you believe about the recession odds?
Well, I think the important issue here is that the Fed is in the process of cooling the economy down. So it's not surprising that since they started raising interest rates in March of 2022, we have started to see consumer spending slow down, in particular, those components of consumption that are sensitive to interest rates going up. So that's also what we should see in the data today, a continuation of a slowing in consumer spending. We have had a very significant deterioration in one of the leading indicators for retail sales, namely same-store sales, which for the last year have gradually becoming weaker and weaker. So I do not agree that the recession probability is as low as 20%. The consensus thinks that the recession probability is closer to 60, 65%. So with the process still of the Fed hiking interest rates, and we are seeing not only consumption, also business spending, we're also seeing, broadly speaking, GDP gradually slowing. We still have the lagged effects of monetary policy ahead of us. So the short answer is there's still some risk to the downside that the braking distance ahead of us for the next several quarters could still bring some slowdown in the broader economic data.
So you gave us the consensus. Goldman says 20%. Where do you stand individually?
So I would say that the probability, I think that we are around 60% still of a harder landing or of a recession.
Really?
Remember also that GDP growth slowing is a very important ingredient of what the Fed is trying to achieve to get inflation back to 2%. Remember, core CPI that came out last week came in at 4.8, and the Fed has the goal that inflation should be 2. So yes, inflation is gradually coming down, but as all FOMC members are saying, there's still quite a long way.
Well, Torsten, you're just leading me to my next question. What's your opinion on the Fed? The consensus is we're going to see a hike in July in just a couple of days from now. Do you believe that might push just too far? And if so, what happens after that if these hikes are just overshooting the Fed's target?
No, Frank, that's right. So I do think that they will hike here in July. But the challenge for them is at the moment is that they say that they are data dependent, which means that they are backward looking. But at the same time, they also say that the effects of monetary policy take 12 to 18 months. So there's almost an inconsistency between saying, well, we have not done enough, and then at the same time say, but we don't really know yet what the effects are of what we have done. So in that sense, I still think that the data will continue to weaken over the next several quarters, and that still raises elevates the probability of a recession here over the coming quarters.
All right, Torsten, I imagine a lot of your clients are looking at these bank earnings coming up today and throughout the week. What's your expectation for the bank earnings, and what is it going to tell us about the economy and also the direction of the markets?
Yeah, this is a really important question because banks are a very critical indicator of where the economy is. We have seen so far bank earnings be a little bit better than expected, but bank earnings so far have mainly been on the bigger banks. Remember, the smaller or the regional banks make up 40% of assets in the banking sector and 30% of lending. So in that sense, when we get the regional banks and we hear from them what's going on with their deposits, what's going on with their lending to consumers, to corporates, to real estate, we get a little bit better idea about where we are going. But the conclusion is, if you look at the weekly data that comes from the Fed, we have seen a very pronounced slowing in lending, both from small banks and from large banks. So from a macro perspective, the banks are a critical input into the discussion of how quickly is the economy slowing up, how quickly are rate hikes biting. And the risk is, in our view, that we are still in the process of slowing, and we will therefore also see more negative data on the macro front, and therefore, broadly speaking, also more data that suggests that the economy continues to go run down the runway. And the braking distance just continues to be longer than anticipated.